it's sort of ingrained in our DNA as human beings that we want to back the winners because we sort of see the winners as being the safer bet, and we're always looking for where can we find safety or security, and so people tend to buy the winners, but then what that does is it causes the prices of the winners to ratchet up much higher than what their fair value actually is, and so as contrarian investors, we actually want to be buying the stuff that's on the opposite end of that spectrum, where companies are actually very disliked, the so-called losers in the industry, because those prices often get bid to well below what their intrinsic value might be. I think the other side of that coin, in terms of investors looking for safety, is that you get this herd mentality where everybody wants to buy what everyone else is buying because they feel that there's safety in numbers. But I think the problem with that is, again, it causes this run up in share prices because everybody's buying the same things. But also I think why people do that is because if they end up making the wrong decision, they've got a whole bunch of other people that have made the wrong decision with them. And so they feel okay that they've made the wrong decision. Whereas I think we at Allen Gray, we're not afraid to be the only ones to get something wrong, because if you're willing to take the risk of getting things wrong, then that also means that you're giving yourself the opportunity to get things right. And especially if you are getting things right in the minority, where the majority of the market's actually taken the opposing view, when you get it right in the minority, you're often able to buy stuff much cheaper than fair value. And so that's where invariably you can generate very high returns from those investments.